Yes, the day we've all been waiting for, the Fed to start decreasing rates after obviously they sat at zero for a long time. They have been on a steady uptick, all in order to control the economy and inflation and all the things. And as we have seen the economy softening, the Fed has determined that it is time to kind of cut those rates. So what does that mean for homeowners? We're going to talk about all that next. Home buyers, because I see so many real estate agents, so many lenders talking about the rate got cut today, so it's time to get out and buy. Why that is not necessarily the case, any different than it was yesterday, and more next. What's up, guys? I'm Jeremy Kane with eXp Realty, living in the Denver suburbs on YouTube. So excited to dive into this one as it gets confused and convoluted, and I want to bring you the information that is most important for you as you make decisions to buy or sell real estate. Obviously, the interest rate has a massive effect on your decision to do so, but is it really that big a deal? Who knows? I always say it depends. There's a call link below that you can absolutely DM me or book a call with me to discuss your exact strategy, because the answer to how's the market, does this rate cut, help me get into my next home, absolutely depends on your whole situation. So as I always say, let's have a conversation now and we can make plans for later, or maybe it is time. But while you're here, like, comment, subscribe, and let's get rolling. So the Fed did cut the short-term rate, which is used by banks to lend to each other. The overnight rate, sometimes it's called. It affects, some of the rates like on your credit card APRs and, car loans and things like that. However, it is not directly correlated to the 30-year mortgage rate, which is the other interest rate that we hear people talking to a lot. The 30-year long-term rate is influenced by bond markets and inflation and some other things. So sometimes they don't always move together, right? The Fed rate affects short-term lending while mortgages are driven by long-term economic factors. And so when we hear that the Fed cut the rate 50 basis points or 0.5%, as sometimes it's labeled, the truth is that your mortgage rate didn't just go down 0.5%. In all actuality, the mortgage interest rate has come down about 150 basis points or 1.5% since the beginning of the year. With information traveling so quickly and the Fed, leaking all this information, the market had already baked in the Fed rate cut into the mortgage rates. The truth is, I was talking to some lenders who I respect pretty well, and they were saying that the Fed was going to make everybody mad if they, dropped it, a quarter point versus a half point. And that might increase, right? Rates might bounce up. It might actually be a negative thing, right? Mortgage rates might bounce up even though they decreased a quarter in the Fed rate. Turns out Jerome Powell came out today and, made it fact instead of just hearsay that they were going to cut it a half a point, 50 basis points, 0.5, whatever you want to say. So what happens when the Fed cuts rates? Lower Fed rates affect short-term borrowing. So this is your HELOCs, your credit cards, that kind of stuff. Mortgage rates depend on the long-term bonds, the yields, which don't always drop with the Fed rate. So when previous Fed rate cuts, sometimes we do see a little bit of an uptick. The truth is that mortgage rates really just want stability, right? They don't want surprises. Like I referenced earlier, if the Fed didn't cut rates enough or what the market thought was enough, you might see, a little pullback in the bond market, and that might cause interest rates to go up. So what does today's rate cut actually mean? Well, the truth is they've been talking about it for 6, 8, 10 weeks, making predictions. So when we really started seeing that, we started seeing, inflation stabilize and jobless claims go up, right? We figured that this rate cut would be coming. We didn't know if it was a half rate or a quarter point, but we knew that would come. And that's when interest rates really dipped. And the truth is the mortgage interest rates were, hovering around 7, and now they're already down to hovering around 6 over the last month, right? What's that mean? Simple math on a $600,000 home, that saves, a homeowner about $300 a month when you lose that, 7 to 6% when that mortgage rate drops that much. So that's a huge savings, right? $3,000 some a year. That's a big deal. $300 per month on your monthly income could absolutely affect your debt to income so much as, increasing your buying power about $50,000, right? So what that means is, regardless of all of this, if you were expecting that your rate was going to go down a half a point, it already has this year, so that's the good news. But what's that mean for overall, right? How's our affordability? Certainly $300 a month is huge, but if you're one of those people that are waiting for rates to come down and you're referencing 2.5% or 3% interest rates, we're not even close to that. And hopefully we don't get there because it's just not sustainable in the economy, and our housing market can't really afford to have that much buying power out there, because then, prices skyrocket. We have bidding wars, and the truth is that no one really wins in that market. The sellers win, but if the sellers have to buy another house, they don't win. So the truth is that the Fed rate is signaling the end of, that kind of increase as we go. It's the official end to kind of this drought that we've had. However, there's still a lot of work to do. Now, there is word that, they expect it to drop another quarter point or half point by the end of the year, probably after the election, to just kind of soften that economy. So the truth is that when jobless claims go up and inflation's, kind of under control, the Fed rate is trying to control the spending with this rate increase and decrease. So that's what's really going on, and it's more of an economic outlook, right? And so when the economy, kind of gets a hold of inflation, then both rates may celebrate at some point. So what I see, right, and what this means, certainly we're talking about interest rates being kind of under control. I even saw someone mention that maybe, as they kind of leak out the next Fed rate cut, it could, dip mortgage interest rates 6%, which would be absolutely great. But at the end of the day, kind of depends, right? We've seen, an increase in showings, an increase in buyers in the market due to this, recent dip in mortgage rates ahead of the Fed rate cut. And what's that mean? That means more competition in the market, more competition out there. So maybe you are saving a little bit of money by buying down the rate or getting a seller concession as a buyer, maybe say in July, right? And now if there's multiple offers, maybe that concession isn't available. So maybe you were able to buy your rate down permanently to 5.5, or you're able to take advantage of that 3-2-1 buy down, and you're sitting there pretty with a 4.75 interest rate right now, or whatever that looks like, right? And so when we increase competition and, the affordability comes down, more competition comes to the market. And this is something that, may actually cause buyers to have to go with that par rate, right? The buyers that aren't able to get those seller concessions on that home because now there's more, competition in the market. And so the truth is that this is really a case by case basis. And there's a ton of, options out there. There's tons of creativity when it comes to mortgage rates and how to buy those down. But a lot of that creativity and a lot of that power leaves the buyer's hands when we see multiple offer situations, when more buyers come to the market due to the increased affordability and that kind of stuff. And oftentimes it jacks the price up, right? We likely will see in the lower price points 25 to 50,000 over asking if we see any more of a mortgage rate decrease, right? Well, that 50,000 number is important because it increased their buying power 50,000, but now if they have to buy 50,000 more, they're right back to square one, right? And it's kind of a wash. And that's where people really need to focus, is their monthly payment, right? We can talk about the interest rate. We can say it's great time. Interest rates just dropped, which is a lie. They dropped last week and the month and so on. So when you see realtors and lenders talking about your interest rate just dropped, and they're talking about the Fed rate, which has nothing to do with your 30-year fixed rate in the grand scheme of things, they're actually lying to you. But if you really look at it and you say, okay, that's great, I'm going to get out there and I'm going to go, well, then what's that mean, right? How do we, work with a real estate agent who understands what all this is going on and says, okay, let's look at this long term. Truth is, if you were close to being ready, the time probably to get in the market was earlier this month when we saw rates decline tremendously, and it was still a little bit slow because the word hadn't got out, partially because everyone was focused on this Fed rate cut, which we already celebrated, right? So the truth is the mortgage rates have been, where they're at for 2 weeks as a result of what they thought was going to come. So next time they're talking about the Fed rate cut and you're waiting for that perfect interest rate, the perfect time, which we all know we can't time the market, get your butt in the market 2 weeks before the Fed is going to cut the rate more, and maybe you'll see some celebration there. So overall, it's a great win for the quote unquote economy, kind of the end of the inflationary time period that we're under, and hopefully that's under control and we're kind of moving forward. I have my doubts with some of the things that are coming down the pike with all these new credits and paying for different things. Either candidate wins. You can check out my video on the candidates that I did previously, and their kind of housing plans and things. All of that's going to cost money. If we're giving out free money, inflation's going to go back up and we're going to be kind of in this crossroads. So the honest truth is, if you are looking to time the market, you need to book a call with me. We can talk about it. I will tell you the truth. I will tell you, what it really looks like, because it truly depends on your situation, right? What lease you're in, how much you're paying for rent, what you can afford, how much cash you have in the bank. All of these things matter, right? What's your credit score? And sometimes it's great to, rent for another year if you're going to really, dedicate to working on your credit score, dedicating to, saving that cash for a down payment, understanding the options for down payment assistance that we talk about so much on this channel. If you understand that and you have a plan, then you kind of remove the market, unknowns and the scarcity surrounding the market, because you have a plan. And regardless of how we get there, we're going to get there because we understand exactly what it's going to take. Versus now, if we're, at the top of our budget because we just got $50,000 worth of buying power back, and now we have to, settle for the house that doesn't have a ton of competition. Well, that's when things get a little bit rough, right? And we need to make sure that as we're buying in this high market, whether it's high prices or higher interest rates, we need to make sure that we are focused on our goals and our long term. Because the truth is that prices have kind of stagnated, but now that we have that rate and we get that little affordability back, are we just going to go spend that money, or are we going to actually take advantage of that savings and be within our means? That's what's most important, and it all has to do with what your plans are, how long you're going to be in the home, if you have, the plans to turn it into an income property, and all of those things come into play. And since I love helping others build wealth through real estate, I would be 100% happy to have that conversation with you. So while it's a good sign for the economy and all the things, all the headlines and all of the stuff that says the interest rate just went down 0.5% or 50 basis points, the truth is they're not talking about the mortgage interest rate, so I'm not sure why lenders and realtors are phrasing it that way. So I hope that helps you kind of get an understanding of what it actually means today. Not saying it's a bad thing, not saying that the mortgage rates didn't improve because this was going to happen, but the truth is you're about 2 weeks behind, and you could have taken advantage of it the last 2 weekends. So if you didn't, and you're interested in jumping in now because you like that information, you love that $300 savings, book a call with me, comment below, DM. I'd be happy to help. Other than that, like, comment, subscribe. I'm very tactical on this channel and on my social media because I want to help you win at the game of real estate by building wealth smartly and wisely as we move forward. So have a good night. We'll talk to you next time. Bye-bye.